And Federal Reserve Chair Jerome Powell is back on the Hill today at 10 a.m. Eastern, but the market is still feeling the effect of yesterday's testimony in front of the House Financial Services Committee. His hawkish tone reversing the recent AI-driven rally. Let's take a listen to some of what he had to say.
Given how far we've come, it may make sense to move rates higher, but to do so at a more moderate pace. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. A while ago, there were 2 jobs for every unemployed person. Now we're down to 1.7, I believe, or 1.6, and that still speaks to a historically tight labor market. We're not there yet. We still have a significant excess of demand over supply.
So will the market downdraft continue, and are investors pricing in more tightening? Joining us now on this is Anastasia Amoroso, iCapital Chief Investment Strategist. So, Anastasia, I got to ask, is the market pricing what their expectations for the Fed are correct?
I think they are, absolutely. I mean, the fact that we priced out the rate cuts from 2023, that was a significant and important repricing that needed to be done. And now we're pricing at about a 70% probability of a July rate hike. And again, that's probably about right, although that can whipsaw, quite a bit because we're still a month away from the next Fed meeting. So I do think the markets are hearing the Fed. They're hearing Fed Chair Powell saying that the job is getting done. It's progressing, but it's certainly not done yet. And I will say, Diane, I think one of the remarkable things about this market has been that tech, not this week, but prior to this, has been able to rally even while we had this repricing in the 2-year Treasury yield. So that to me sort of speaks to the market that is driven more than just by Fed expectations at this point.
Well, and sort of to that point, Anastasia, are stocks rallying despite the fact that the Fed is going to raise rates a couple more times, or are stocks rallying because whether or not the Fed is done or it's twice more, they're almost done, right?
Right. Yeah. I mean, close to done or done. I mean, I think, it's semantics at this point. And look, after the Fed has delivered over 500 basis points of rate increases in a short amount of time, what's another 25 basis points or another 25 basis points on top of that, especially if the pace of that gets spaced out over, let's say, months, if not quarters. So I think that's why the markets have been able to kind of look through this and shake it off. And look, I do think that the Fed has to stay at 5.25. Maybe they go to 5.5, 5.75, and they just have to stay there. So I think that's what the markets have also gotten comfortable with, is we don't need to see rate cuts. We just need to see a stable economy and the Fed that is keeping rates where they are today, or maybe a little bit higher, and let the inflation do its thing on its way to coming down.
So to your point about letting inflation do its thing, I mean, Federal Reserve Chair Jerome Powell stopping short of actually calling the last move a pause. Would you say, I know what expectations are for July, but do you think that the Fed needs to go anywhere past another 50 basis points?
I don't think so. First of all, Fed Chair Powell said it yesterday and also at the meeting last week, and he said that the conditions that needed to be in place to let inflation start to decline, those conditions are finally here. And what it's referring to is you need to have GDP growth that is below potential. Potential is right around 1.5%. We are pacing 1.8% this quarter, but likely we're not going to get there for the full quarter. So I think we do have that first condition, below potential GDP growth. We have the labor market that is clearly rebalancing. He mentioned those job openings and the ratio of job openings to the number of unemployed people. It has also declined. So that's a healthy development. And then when you look at some of the biggest culprits that drove inflation higher, it was fuel prices, it was food prices, it was supply chain bottlenecks. And all of those things have all that but resolved. And I guess the last part to put in here into this pretty complex inflation puzzle, you've got services inflation that's a function of wages that has been coming down. And you've got housing inflation that Chair Powell also expects to start coming down. So I think a lot of those conditions are in place. And that's why if they just stay pat and let this trajectory play out, I think we will eventually see 3s, if not 2s, on inflation.
Right, although it doesn't seem like they're likely to stay pat right now. But, things could change before we get to the next meeting at the end of July. Anastasia, what does all of this imply for where the markets are going to continue to go? Yes, we've had a little bit of a pause, right, from the rally. Do you think that's going to resume, and how far can that take us?
Yeah, I think this market has done a lot in a short period of time. You've got the S&P that, prior to the recent pullback that rallied almost 8%, in 6 weeks or so. You've got the NASDAQ 100 that's up 37% on the year. That is a massive move. And I think we were absolutely ripe for some sort of a pullback, some sort of a consolidation, because what's really driven this kind of last leg of the rally is a lot of people realizing they're not long enough. They're not long enough tech. They're not long enough equities. And they were jumping in, whether that's hedge fund investors, whether that's retail investors. And I think a lot of this sort of, initial pent up demand for equities has likely been satisfied. And, if you get, more hawkish messages from the Fed, if we have to reprice the Fed trajectory higher, or if we got some bumps along the way as we head into the second quarter earnings season, I think you could have catalysts that make this market pause and consolidate. So I think it's very normal at this point to give some of the rally back. Now, having said that, Julie, we're going to talk about the consumer. We talk about the U.S. economy. It is surprising to the upside. And against that backdrop where the Fed is close to done or done, and the economy is actually outperforming expectations, that bodes well for earnings. And that in turn bodes well for stocks. So I guess the bottom line is, if we get a pullback, I think it's very much a viable one.
Anastasia, I want to get your thoughts on this. Yesterday, we heard some more Fed speak. We had an interview with our Jennifer Schomburger with Atlanta Fed President Raphael Bostic. I want you to take a listen to that because there is a differing viewpoint in terms of the path of Fed rates. Let's take a listen.
I do feel like we're in a position now where some patience can do us well. And look, I really want to try to do all I can to make sure that we avoid a significant economic downturn.
Now, Bostic, not a voting member, but what do you make of what he said? And do you think it could potentially influence the path of rates?
I mean, I think we are very much splitting hairs a little bit at this point. And, there's a very balanced view that I think a lot of the FOMC participants hold. I mean, of course, from the credibility standpoint, it does seem like the Fed needs to do more because core PC inflation is still 4.7% and it's not quite 2%. But at the same time, I think what we've heard from Bostic also makes a lot of sense because we've done so much. And then the other slow motion thing that's playing out is credit conditions. They have tightened significantly, and credit availability to the economy is likely to drop in the coming quarters. So that's happening in the background. And so knowing that, let that part of the cycle do its job now in terms of slowing down the economy and pause on the rate hikes. That argument also does make a lot of sense. But I think, when you net out those two things, the credibility versus let's just let the credit contraction cycle play out. When you net out those two things, I think that's why you get, maybe another 25 basis points, maybe another 50, and not the sequential rate hikes that we've been getting.
Anastasia, stay with us because as promised, we're going to get to the consumer.